let's say you had 10 Bitcoin and it's worth what, 70,000 today, right? So you've got 700,000 in Bitcoin and your 10 Bitcoin, and you borrowed 350,000 of it, half of it. You'll get a little 8.9% rate. You'll have the cash. You can use that cash to go buy, a $350,000 house. And if Bitcoin drops in half, right before it hits 90%, they'll sell it, right? So there won't be a margin call. It'll be an automatic execution. You'll lose your Bitcoin. You'll get the change, right? So if they sell it at 90, you have 10% left. They'll give you that, but you've paid off your loan and you've lost your Bitcoin, right? So you basically hedge that dropping market by getting your Bitcoin sold on a falling, that could fall to 50. You can buy it back at a lesser price, but now you have a free and clear house, right? So most people, what they do is, I'll give you a great example. In 2016, every 4 years in the Bitcoin world, it halves. So everybody thinks it goes up for this bull cycle, and then down for the bear cycle every 4 years.
Welcome back. Today I'm sitting down with Bill Farrell, aka BitBoomer on YouTube. Bill, thanks for joining me today.
Hey, Shay, great to be here. I love you, man.
Man, I love you too. Today we're going to talk about how to buy a home with Bitcoin, or how to leverage Bitcoin to buy out, right? So Bill, for people that don't know you, do you mind giving a brief intro of who you are and what you do?
Yeah. I've been here in Tahoe for 30 years doing loans. It's been a great ride. I love this place. I love all the realtors we work with, and our clients are a lot of times second home buyers from the Bay Area. They got a lot of questions about assets and Bitcoin and selling their companies. And so we get complicated deals a lot. So this just creates another avenue for discussion and actually can tap into quite an asset that they have. I've been in the leading edge of lending for over 25 years. 1998, I was actually at the National Association of Realtors Conference with a video conferencing system that ProShare, it was called. It was an Intel product. And we would actually have Andy Grove, the CEO of Intel at the time, on live taking a loan application over this unbelievable system that today is Zoom, and we do it every day, right? But that was a big deal because it was on ISDN phone lines and it was still a dial-up world. And so we had a product that could take the consumer through the whole process online in a matter of minutes. And now we do that every day. So it's a leading edge then. It fell apart. It was called virtual realty and it didn't last. But hey, here we are, and we're doing it again with Bitcoin and another new asset class that I think could be a real game changer in the home market here certainly in Lake Tahoe.
Certainly, and that was ahead of its time back in 1998. You're also involved with the folks at Figure. You helped spearhead the AI HELOC, correct?
Correct. Yeah. Well, for Nexa, for sure, we brought the product in. We were the first broker to get the product, and it was Figure had designed the product to be their own.
And to take a step back, Figure is an online lender, right? And they rolled out one of the first AI home equity line of credit platforms and products to be able to underwrite a HELOC, is what we call them, a home equity line of credit within,
right?
Within what, 45 minutes?
Yeah, even 20 minutes.
20 minutes. People are getting HELOCs.
Fully approved and signed in rescission, funding 3 to 4 days later.
Yeah, so ultra quick.
Yep.
It's all done through AI. Bill has been spearheading that at our current company. We're at Nexa Mortgage, now called Nexa Lending. So let's get right into it. If you want to buy a home with Bitcoin, how can you do that?
Most agents and even buyers think that you have to find a seller willing to sell. Interestingly enough,
sell and accept Bitcoin, right?
Yeah, like they have to take your Bitcoin instead of cash, right? Or other ways. But there was a sale right here in Lake Tahoe in 2018. Chamath Palihapitiya, right? The social capital guy down in Silicon Valley, All In podcast. He's probably trying to follow you. So he has good podcasts, right? You're number one podcast, I think, out there.
If you're out there, Chamath, thanks for this.
Right. He was like an early Facebook guy, even AOL, right? Back in the You've Got Mail.
Yeah, exactly.
Anyway, he bought a house in Martis Camp for $1.6 million and spent 2,200 and change Bitcoin on it. Well, today that would be, hundreds of millions of dollars. So it's, if it was worth 100,000, that's a $600 million purchase. So the Bitcoin appreciated way faster than the house did, right? It's probably a $5 billion lot. He paid 1.6 back then. Great appreciation for real estate. But now the homes are, 10 million on those lots. So you'd have to build the home. This was just a lot. but he did the whole sale on Bitcoin, had an escrow company that was willing to do it. It was a lot of mechanics. It was, really pioneering the first sale, actually, of real estate on the blockchain that I know of. So
And now it's much easier than that, right? So
much.
tell us about the mechanics in a real world scenario today for people that have a lot of Bitcoin, they don't want to sell it, but they want to buy a home.
Yeah, and that's the key is they don't want to sell it, right? You get capital gains, you got all kinds of issues if you sell it. Plus, the real reason is they want to hold it. They don't want to sell it, right?
They want to hodl it.
They want to hodl it, right? And hodl it's an interesting term, right? So in 2010 or 11, there was a guy on the BitTalk network. It was like a chat room back then. Well, all the Bitcoin geeks were doing their thing, and they're all crypto guys. And they were mining Bitcoin and making lots of it, and it was worth pennies. And this guy, Laszlo, he said, I'm going to do the first transaction on Bitcoin. He says, I'm going to buy a couple of pizzas. So he put it on the BitTalk and said, I'll pay 10,000 Bitcoin for 2 pizzas. Right. So this guy in San Francisco, an exchange student from the UK, don't remember his name, but he said, yeah, I'll do that. He pulls out his credit card, he calls Papa John's, has 2 pizzas delivered to Laszlo, and then he gets his 10,000 Bitcoin. And, when Bitcoin hit 100,000, that's $1 billion, 2 pizzas, man. So the Bitcoin network went nuts and said, why would you want to sell it? Where it's going to go up. And it was worth, I don't know, 40 cents at the time. So it was a $41 Bitcoin transaction, right? So 40 cents at the time. So now it went to $1. And all these people are like, you fool, you just paid, $120 for 2 pizzas.
Yeah.
And then, so he says, no. He says, but all you guys from here on out, he wanted to say hold it, hold your Bitcoin. And he spelled it HODL. So it became HODL. And that's where HODL was born. So,
Became a worldwide meme.
right. So I've got a website called hodlloans.com. So it's right there.
Bill is a Bitcoin connoisseur. So so you want to leverage your Bitcoin because you want to hold on to it. You preserve your capital gains.
Yep.
And also you preserve the appreciation that's been happening on Bitcoin.
Yeah.
So let's dive back into that. So the idea is to leverage it. How does that happen in a real world experience?
So in the real world, what we do is we own against it. It's like a margin account, right? You got $1 million.
That's a margin account for people that aren't familiar.
Yeah. So you got $1 million stock account. You can call your broker and say, hey, I'd like to borrow 100 grand off of my, $1 million account. Yeah, no problem. We'll get you a decent rate. You can borrow against it. And if your stock drops in value, at some point, they'll have a margin call, right? We've all heard of that. So
that's where you just pay the loan back.
Yeah. So say he had 500 grand out and his stock got cut in half and now his stock is worth less than his loan. He'll get a margin call from the brokerage and say, hey, look, you got to pay it off. The challenge with that is that sometimes, you have an Enron or some of these other cases where Friday afternoon it's worth $1 million and Monday morning at opening it's worth 100.
Yeah.
Right. So it drops tenfold and underwater, you got to pay that money back.
Yeah.
Right. With Bitcoin, that doesn't happen. So you can take your Bitcoin. Let's say you had 10 Bitcoin and it's worth 67 and 70,000 today, right? So you got 700,000 in Bitcoin in your 10 Bitcoin and you borrow 350,000 of it, half of it. You'll get a little 8.9% rate. You'll have the cash. You can use that cash to go buy, a $350,000 house. And if Bitcoin drops in half, right before it hits 90%, they'll sell it, right? So there won't be a margin call. It'll be an automatic execution. You'll lose your Bitcoin. You'll get the change, right? So if they sell it at 90, you have 10% left. They'll give you that, but you've paid off your loan and you've lost your Bitcoin, right? So you basically hedge that dropping market by getting your Bitcoin sold on it could fall to 50. You can buy it back at a lesser price, but now you have a free and clear house, right? So most people, what they do is, I'll give you a great example. In 2016, every 4 years in the Bitcoin world, it halves. So everybody thinks it goes up for the bull cycle, and then down for the bear cycle every 4 years. In 2016, it would cost you for a 357,000 average home, 968 Bitcoin. 4 years later, in 2020, that same house would cost 41 Bitcoin, right? So, and then you go to 2024, and it was like 9 Bitcoin, and today it would probably be 6. So the Bitcoin is worth more as an asset than it is as a leverage tool for your home. So you could take that, if you had that 968 Bitcoin that it cost you back then and borrow it against it, you still have the Bitcoin and the house. Then you can refinance the house, pay off your loan, and now you have both assets appreciating.
Mm. So that's the power of leveraging the Bitcoin.
Phenomenal opportunity. For people that understand it and own it, it's a phenomenal asset tool.
Where can people go to do that?
Well, we can facilitate it right here. We have Bitcoin loans. We can facilitate it. We do it through Figure. It's an SEC they're publicly traded. They went public in September, did a great job at their IPO, almost 2 billion. And their stock is the number one performer last month in the tech sector. It's been a solid company. The founder of Figure is Mike Cagney. He was the co-founder of SoFi. And this company has all of this platform laid out. The definance, they call it DeFi in the financial world. So we can dive into that if you want. But basically, it allows trading of coins and a marketplace for everything where you can trade with democratized assets. So what he's done, like the HELOCs, we talked about that. They're all the same. They're all AI driven. They're all underwritten the same. There's no discrepancy from an underwriter's perspective. They're known, and the default rate and everything. So these people line up to buy into that pool because they know that the thing is real. The blockchain is great at trading trust for truth, right? You have to trust that the tax returns the borrower gives us today are real. You have to trust that the appraiser made a good appraisal. Well, this system takes assets directly from the source. So it's total truth, right? You don't put a bank statement in this loan. We connect to the bank and get the data. You don't put a tax return in. We connect to the IRS and get the data. AI takes all that real data, so it's trusted, and now your auditing of that pool is less. That creates a higher yield. People can invest in it, and they can buy in a small piece or a large piece. So it's creating a new capital markets, but at the same time, it's creating a phenomenal opportunity for the homeowner because it's going to be cheaper and faster.
So that's blockchain is what you're talking about.
That's blockchain.
Okay, so for people that want to leverage their Bitcoin to buy a home, you can come to Nexa Mortgage. You can talk with Bill Farrell, aka BitBoomer.
Yeah.
And Bill can help you out with that. He's the master of that here in Nexa. He knows the people personally at Figure. He knows Mike and his team. He can spearhead that for you, and he's phenomenal at that. So if you're looking to buy a house with Bitcoin, reach out to Bill. I'll include his contact information in the show notes below. Let's talk about blockchain.
Yep.
You are spearheading a new technology, and not a new technology, but a new company that transitions away from the old way of managing title and escrow during a real estate transaction now into a new way that includes leveraging the blockchain to identify and verify title and escrow documents, correct?
Indeed.
Can you dive into that a little bit and why blockchain, along with what this is doing? What is a blockchain? Let's really boil it down.
It's for blockheads like me.
Blockhead. Exactly. It's for dum-dums like me.
Yeah. So great question. So a lot of people are confused about what blockchain is and what it means and all of that. But what it is, in my opinion, is the new internet, right? We have the Web 1 was email, right? Back in my day in the early 90s, we got email. And, the old AOL, you got mail. That was kind of fun. You dial in, you had the modem that went beep, beep, beep. It got you into there, and then you got mail. And so you'd send an email, and you look at it once a day. And then it became business certainty, and you started doing commerce on it. And when commerce came in, we call that Web 2, where Amazon was born, and AWS and all these amazing services that control the economy today were born on that. And now we'll move into Web 3. And what blockchain...
So it's basically the third iteration of technology.
Everybody's dubbing it Web 3. And decentralized finance is part of it. Moving money is part of it. But the blockchain is a series of blocks. So what happens is you have a bit of information that is what is going to be a block. So it gets compiled over... let's take Bitcoin, that there's a lot of blockchains, right? Bitcoin is one use case.
Blockchain is a technology.
It's a technology where the nodes are everywhere at once. So there's no central server. There's no mainframe sitting in an office. There's nothing to go hack. There's a million computers all at the same time that have the network on it. So if you wanted to hack it, you have to hack all, 50%, 51% at the same time to get consensus on your deal. So to create a block, you have to have what they call miners. And these miners take the data and they compile it into a series of hashes, which are just numerical strings that mean things. And once a block is full, they have to solve a cryptographic equation that takes the data from the first block, the most recent block, and the new block, and it's a cryptographic equation that gets solved. If you solve it, you get a token, and then everybody will see, yep, that's the real solution, and they'll have consensus, and now it moves to the next one, and nothing can be changed in the history.
So it solidifies the block.
It solidifies the block, and you just build one on another. It's a chain of blocks.
So why is that good in a real estate transaction?
Yeah, so in a real estate transaction, it's phenomenal because you have a history of data. Let's take a title insurance policy, right? So today, if you get a title insurance policy, the title company will go to their plant and they will search your title history record. They'll look at any liens that might be there, some that might have got missed. They can go back. There's a long tail all the way back to the early or late 1800s, 1900s. So there's a lot of mistakes that could have been made, right? So every day that somebody comes in and looks at a record, they could see new stuff and old stuff, but they have to ensure that it's real, that you have full title to it and you get a policy. Well, with blockchain, you can show that full history in one block, right? And you can see the whole history of that entire chain. And now each time you just date down from current to then, and the next buyer comes in, should be able to get a cheaper title policy. You don't need a whole new one.
Because it can't be changed. The past can't be changed.
Correct.
The verification happens quicker and more efficient and cheaper.
And we memorialize the entire work of a title search today, and that won't be any different than what they do in 5 years if they continue to do that. And instead of getting in a whole new title policy, you can then just do a faster, cheaper, better way. Because right now it takes 20 hours for a title company to do all that work. It's a significant amount of work. And the title agent has to look at it and verify it and then approve it. And then you have the policy that comes in, and that's expensive. So,
and then you pay title insurance on top of that to make sure what they verified wasn't incorrect.
That's right. So, and it can be, right? So there are claims. Most of the claims today are liens that didn't show up at the closing, a sewer lien, an old, tax lien or something that shows up that wasn't recorded properly. And then they have to pay out the claim on that stuff. So that's a big part of what it is. But the claims are 4% of the premium. All the work is in the manpower and the actual people doing these research that can be memorialized here. So you never have to do all that again. You just do the current time frame from the last one to this one.
It's extremely inefficient currently. So you're synthesizing technology on the blockchain to help create a more efficient title and escrow process.
Right. And the escrow process is clunky. We have wire cutoffs. We have the Fed wire system. They have the Patriot Act, or what are you using the money for? Are you sure you want to send this? You had emails coming in from unscrupulous people saying, send your money here. And it looks like it came from the title company. So the unknowing buyer, we had it happen right here at First Centennial Title here in Incline. They had $1 million borrower money coming in that got stolen because they slipped into the guy's email with wire instructions that weren't to the title company. They were his wire somewhere overseas. So, and they had to pay out that claim, right? And so that's the real expense in this. With the blockchain, we can eliminate that need. We could create a place for the borrower to go and know with certainty what the wire instructions, it's right there in their portal. They can pull them up. They don't have to get an email. They know right where to send it.
And what's the company name that you?
24/7 is work.
24/7.
That's the other thing we can do. We can close around the clock. We can close Christmas night at 2 a.m.
Because the robots, aka computers, never sleep.
That's right. And Santa's on the roof.
Exactly. So you're creating a safer, cheaper, more efficient,
cheaper, faster, more secure.
Yeah, that's fantastic. I think there's a huge need for that. I've always wondered why title insurance has to be charged every time. It's tied to the buyer, which buyers, there's turnover on buyers all the time.
Right.
But it's never tied to the property, which never made much sense to me. Let's go back to talking about Bitcoin. I know you are a huge proponent of Bitcoin.
I am.
Why?
Well, I think that Bitcoin is digital gold, right? So, my father used to always tell me, hey, save your money, put away 10% of what you earn, stick it in the bank, save it for later. You can use it to buy houses. You can use it to have a rainy day fund. You can have all these things. But what my father didn't realize, and what's become more real than ever, is that the dollar gets less and less valuable as time goes on. The Fed puts out $6 trillion during COVID, right? That debases your dollar, and your spending power just went down by 20%. But you still have your same amount of dollars.
Inflation.
It's inflation and debasement both.
What is debasement?
So that's where the dollar becomes less value because they throw more out there.
So there's more supply circulating
$6 trillion.
and the same amount of demand,
Correct.
which makes it less valuable.
Right. And if you have a finite number of dollars that are in circulation at any one time, you don't debase it, right? If you wanted to put $6 trillion in, you'd have to grab it from somewhere and put it in. Well, the Fed just creates it.
They just print.
Yeah, it sounds like a big printing press. 6 trillion. That thing would be hung for a long time, right? The
Right.
printing press go burr. But it's really just a ledger entry. So all they do is say, okay, Bank Chase, you got 4 billion, and they can distribute the money. So
Most of that happens to the balance sheet.
that most of that happens on the Fed balance sheet. Exactly right. So they just take that money and they pay off this treasury and issue a new one. It's the only entity in the world that can put up debt and then buy it. Right. So there's no real e-commerce going on there, but that extra money in the economy devalues everybody in it. And then you had inflation, right? And the inflation rate during COVID was 9%, right? So you're going down 9% plus a debasement of 10%. You're going backwards almost 20%. Well, Bitcoin solves that because there's only 21 million tokens and 20 million of them have been mined. There's only 1 million left to mine, and that'll take 200 years to make it happen. Just because of that halving we spoke about, it gets half and half and half less valuable over time, and that creates demand, right? So you have less tokens, and it's a finite number, 21 million. And if you go to the bank and put your hard-earned money there or let it accumulate there, they lend out that 10 to 1, right? So their fractional banking system allows them to lend $1 million on $100,000 deposit. And they're out there making loans and making money, and they're getting, 4, 5, 6% on the loan. They have to buy treasuries in reserve. So they use some of that money to buy some treasuries. They're making, 3, 4, 5% on treasuries. So they're making 12, 13% on the money. And what do they pay you for your deposit?
3.5.
Maybe, yeah, maybe
Sometimes
2, unless you go money
sometimes
market.
0.01.
Yeah. So they're scooping all the rest of that. So you're financing their empire without, and if God forbid that Silicon Valley Bank in 2023, right? All of a sudden, these big Silicon Valley companies said, why is Silicon Valley Bank paying me 2% on my deposits? I got $1 billion, I'm Apple, in there. I can go get treasuries for 4.5. So that's what they did. They pulled their money out and went over here, and pretty soon the biggest bank for the Silicon Valley went bankrupt overnight, right? Because they didn't have the money for all the people that wanted to pull their money out, right?
So they had a run on the bank, and they didn't. The money was nowhere to be.
And it wasn't really a run on the bank because they didn't trust the bank. It was the bank wasn't providing enough of a return to keep their money there. So they put the value where it was, and that left them with no cash and no liquidity. They couldn't sell their treasuries because they were 2% coupons from 2015, 16, 17 that they were holding 10-year treasuries. So they could only sell them for half price because the current treasuries were 4.5, right? So these 2% treasuries were worthless. So they had to sell them at half price. They were insolvent. They shut them down, sold them to JP Morgan Chase, the big gorilla, too big to fail. They get all the assets and none of the reliability. So, and what the Fed actually did to bail them out, the FDIC didn't have enough money to do it. So the FDIC insurance wouldn't have covered it. Only about 10% of the bank holdings are really insured. So it sounds like this great system, but in a situation like that, the Fed just said, we'll pay you face value for those 2% coupons. So the Fed just put them on their balance sheet.
Bitcoin combat this.
There's a finite supply. There's only 21 million of them, right? Everybody says, why is it worth something? Well, why is the dollar worth something when dollar's been going like this in value and Bitcoin's been going like this? Which one do you want to be on?
The dollar's worth something because we agree that it's worth something. We agree that we can exchange whatever it is. We can exchange
the full faith in,
we can exchange a gallon of milk for however many dollars.
Right.
And then that person can take those dollars and exchange it for whatever they want. It's just really, it's a thing to transact with.
Correct.
If all it takes is for all of us to not believe in the system for the dollar to then be just a piece of paper.
Correct. Yep. And
so how's Bitcoin different from that?
Well, it's not just the United States faith. This is a global event. So there's people all over the world that want Bitcoin. So they store it as a store of value because they don't want to sell it, right? But recently we saw quite a decline. It hit 125 or so in October. And today it's worth half that, or 67,000, something like that. So right at half. So that 40 or 50% decline that you saw was a lot of fear that came in when it hit that high number. There were tons of people that were those early day Bitcoin miners that were making, 7,000 Bitcoin a day on their mining, and they had a ton of it. And so they said 100,000, I'm out, right? That was the number that, there's a saying in Bitcoin world from the early days, when Lambo, right? When can I buy a Lamborghini with my Bitcoin? And this when Lambo phrase went around. Well, $100,000 Bitcoin was when Lambo. These guys that had 10,000 Bitcoin were billionaires, right? So they started selling, and they sold a lot of it. And that supply created a little bit of a pullback. And Bitcoin is like any other chart. It goes up and down, and you can see these cycles, and the analysts look at it and they can tell the technicals. But it's been on about a 30% per year climb since its inception. So that trend line continues. Now it's broken down below it for a little bit now, as it does, but it will likely rebound fast. But it's a international exchange. You can put it cross-border. Nobody asks you questions. The Fed can't say you want to send $1,000 to Sri Lanka. Who's in Sri Lanka? What are you doing with it? Do you know these people? Are you a terrorist? And a lot of these wires get lost, right? The SWIFT system, the whole wire system takes 3-4 days and costs, $150 to send something overseas. I can do it from me to you anywhere in the world for pennies, right? And there's nobody in the middle.
It's cheaper and easier to transact.
It's faster, cheaper, better.
So what do you see the future? What's your future outlook on Bitcoin?
I think it continues to be a store of value. There's almost $2 quadrillion worth of global assets. If you take all the family offices and the stock market and the real estate in the world and put it all together, it's like $900 trillion. So just short of $1 quadrillion. Well, a lot of people use a 60-40 plan, right? 60% stocks, 40% bonds, maybe 10% gold. You put your safe money in that. So what if this $1 quadrillion worth of assets put 10% into Bitcoin, right? As another hedge, right? Instead of gold this year, because gold ran huge as well. So as gold goes, this is kind of the same digital gold, right? So what if 10% of that comes into Bitcoin? You'd have a $4 million price for Bitcoin.
So what percentage is currently in Bitcoin?
Less than 1.
Less than 1. So there's still a lot.
So $1.3 trillion asset right now.
So there's still quite a bit of the asset that can actually be.
Absolutely. And now you have EFTs coming in, and that's what created that run, right? And last year, the Genius Act passed, which is a stablecoin bill. And right now, Clarity is in Congress being debated about whether or not the blockchain companies can pay yield. Because Figure, for example, they are a security. They didn't play any games going in. Mike Cagney knew that this is going to be something we should do. So he created a security on his token from the start. And it is a U.S. regulated SEC security. So he can pay yields. The stablecoin bill didn't say specifically, and they're trying to mitigate that through the Clarity Act right now, whether or not stablecoins could pay yield. The banks are against it because they're afraid, like Silicon Valley Bank, people are going to be able to get 5, 6, 7% in the stablecoin. Why would they put into 2% in the bank? And they're afraid that it's going to pull a lot of deposits out. So they're fighting tooth and nail to stop this thing. But once this Clarity Act gets passed and there's regulation for these banks, they can get in the stablecoin business too if they choose to, and share in all those profits that they're making, because the bank's balance sheets are wildly profitable. They're taking all of the leverage that you've given them and 10x it into major returns. And the Bitcoin network can keep that more inside, decentralized. So it's peer-to-peer, it's person-to-person. You don't have to have intermediaries. You don't have to have all these, broker dealers and stockbrokers. And you can just buy stuff from someone and trade it with, in pennies on the blockchain with a stablecoin. And it's good as cash. It's backed 100% by the dollar. So would you rather have your money in a 2% return, 10 times levered on the edge of collapse bank, or something that's 1-to-1 guaranteed to get your money back because it's in short-term treasuries with no leverage? They're not allowed to leverage it. So it's a 1-to-1 deposit, paying more yield, and it's safe.
You think they'll ever be allowed to leverage it?
The Figure can, because they have a security. So they're paying SOFR minus a half. So right now, 3.3% just to have it in yield in the bank, right? So it's not a money market. It's 100% liquid. You can trade it for dollars at any time, get a wire of cash, whatever you want to do with it, or trade it into the network. If you want to lend it to the HELOC pool, so there's a pool, we call it Demo Prime, Democratized Prime. You can lend it to that pool. It creates liquidity for the HELOCs that we're doing. where I can buy and sell HELOCs and it gets replenished every hour. They'll pay 8.5% for that. It's just sitting there. So you could take your idle money and put it to work at 8.5%, and it's guaranteed 1-to-1 against the dollar. You can't lose money.
So any John or Jane down the road can go get 8.5%.
You can do it right now.
And is there a minimum amount of deposit you got to do?
But you can throw it in there. I mean, you could pull it out at any time. It's a 1-hour Dutch auction, so that it might start at 5%, and then as the demand is getting higher and higher, and the supply is short, they raise the yield until they get a match, and it might be 8-9%, and then you get a match, and everybody in the pool is getting 9% for that 1-hour investment. But if you leave it in that pool every time, it'll be there for many years.
So your return fluctuates on the hour, is what you're saying?
No, it could be, it can, but mostly it will stay about the same. Right now, the market for those HELOCs is about 8.5. So sometimes we see it go to 11. Sometimes we see it drop at 8.
So on average, it's
8.5%.
Got it.
And if you leave it in there, and you'll get 8.5% every day, not just hour by hour, but for the full day.
Yeah. From the way you talk about Bitcoin, to me, Bitcoin seems like the people's currency.
It is.
It gives power back to the people.
100%.
What it seems like to me.
Decentralized. Nobody can control it. Nobody can print it. Nobody can do anything to dilute it.
No manipulation.
It's 100% 21 million period. There's no more than that ever to be made. And they've sliced it into 1 million pieces. So you can buy a Satoshi for 1/1,000,000th of a Bitcoin, right? So I think that's actually 10 million. So Satoshis are small amounts that you can trade and use, but it's not a great coin to transact. You're not going to go buy your coffee with it, right? Because it's too valuable, right? You don't want to send your Bitcoin. So get a loan against it for 8% and watch it grow at 30%, and then pay off your loan with less Bitcoin later.
Bill, for people that want to work with you, for people that want a Bitcoin loan on their home, how can they best contact you?
Well, we talked about HODL, right? You can go to HODLloans.com, and that's just HODL, like hold spelt wrong, LOANS, right? So 1L, HODLOANS. HODLloans.com talks all about what it is, how it's not rehypothecated. And there's one key missing piece too, that most of these Bitcoin lenders is that they take possession of your coins when you borrow against it. You pledge it to them. You've lost control. You don't have your keys anymore. The keys are Bitcoin talk for control and ownership. If you have your keys, it's your crypto. When you put it in an exchange to trade it, they have your key, right? They trade it. You're at risk there. That can be hacked. That is a centralized database, Kraken, Robinhood, Coinbase, whoever. They had hacks and things happen in those networks, but the Bitcoin network itself isn't. So if you put it in the exchange to trade it and take it out and put it on what's called cold storage or a hard wallet, then it's not exposed to any.
So you don't have to have it on an exchange to get a loan. To get a loan, I guess.
Now, what Figure has done is created what they call an MPC wallet, which is multi-party computation. They take your key and they split it into 3 pieces. They have one, you have one, and Anchorage Digital Bank has one. That's the only digital bank in the United States. They put it in a safe deposit box. When you lend crypto and then you pay off your loan and get it back, it's the very same token. It's not in a pool of tokens. It's not being rehypothecated. That's your token that's being held in custody. And the only time that anybody can move it is if your smart contract says that the Bitcoin value dropped, you're at 90%, liquidate, right? But if anybody else wants to move it, including you, all 3 parties have to agree, right? So it's a much safer wallet. It's not exposed to hacks at the exchange level, and it's 100% safe and backed, by the Bitcoin itself, the very token that you put out. You can watch it on the network and see it never moves.
Powerful stuff, Bill.
It is.
I appreciate you talking about this.
It's a lot. It's deep. It's confusing for a lot of people, but I'll tell you, once you understand it, you get orange pilled, like I have, right? Because Bitcoin is, kind of orange in color. That's the color that they've adopted. This is
Hold that up to the camera for the.
Yeah, this is a Bitcoin night, so it's not really a Bitcoin, right? I'll give you $70,000, but that means nothing. Your keys to the cryptocurrency is what matters.
Yeah.
Yeah. So that's just a representation. But, you see Michael Saylor wearing an orange tie, and they call it being orange pilled. Once you understand it, it's like the Matrix, right? You have the blue pill, the red pill, and you get red pilled, but orange pilled for Bitcoin.
There it is.
Yeah.
Bill, thank you so much.
Yeah, Shay, pleasure. Love it.